Hello everyone. Today we published our global listed real estate quarterly report for the first quarter of 2021. With just over a year having passed since the onset of the global COVID-19 pandemic, we thought it an opportune time to pause and reflect on what the pandemic has meant for global listed real estate. Not only on what it means for the long-term fundamentals for our various subsectors, but also to look at how the public market has priced this in. At Catalyst, we are long-term fundamental real estate investors. As such, we spend an enormous amount of time focusing on long-term growth and long-term risk factors. We have therefore spent an enormous amount of time opining over the impact that COVID-19 will have on our various subsectors over the long term. When we compare this to what we see priced in the public market, we note a few interesting observations. Firstly, the US hotel sector. US hotel stocks have largely recouped the losses which they suffered in the early days of the pandemic. The sector is now priced only 3% below its pre-COVID levels of February 2020. However, when we look at the long-term fundamentals for the sector, we believe the outlook is significantly worse than it was prior to the pandemic. Why is this? This is on the back of what we believe will be reduced business travel across the globe. About 2/3 of US hotels in the listed space cater to corporate and business travel. With the successful adoption of virtual meeting platforms like Teams and Zooms, we believe that even in the post-COVID world, many of these business meetings will continue to remain on these platforms. That means there will be a significant reduction in the need for corporate travel and therefore corporate accommodation. We therefore question whether the public market has appropriately priced this fundamental change into the share prices, considering the sector is only about 3% off its pre-COVID levels. US manufactured housing sector. This is another sector where we find the public market's pricing of it quite interesting. This is a sector which had incredibly strong fundamentals prior to the onset of the pandemic. It's a sector for which there is robust demand due to the affordable nature of the housing solution it provides, almost no new supply, and is also an incredibly low capex business model. We believe that the pandemic did very little, if anything, to affect these long-term fundamentals. However, the public market has priced this sector about 7% below its pre-COVID levels. It's been even more punitive on this sector than it has on the hotel sector. And we pause and ask ourselves if that is justified or whether this potentially provides a very good entry point into a very attractive sector. For more on this and other sectors, please refer to our quarterly report. To conclude, we are very excited about the long-term prospects for the global listed real estate sector. We currently see the sector as a whole to be on the slightly cheaper side of fairly valued in terms of what we demand from a bottom-up perspective. Over and above that, we see great opportunity for astute active managers to find alpha-generating ideas within the various sectors and subsectors in our universe. Thanks for listening.